This is the Kapproveb Soybean Fund 1-year overview reading for the year of 2024. It's currently February 4th, 2024, 9:04 p.m. Eastern Time. That's SOYB is the ticker. And the shuffle file for the reading was created on February 2nd, 2024, 3:18 p.m. Eastern Time. That's this video here in the lower left corner. So the devil card in the theme position is a very difficult card to determine overall trend direction. The devil card could go in either direction, but what it does clearly indicate is that there's going to be a notable fake out on like a multi-year chart scale, a notable fake out or shakeout of some kind. So that indicates to me that we're going to see the end of a range, either the upper end or the lower end of a range on a multi-year scale at least once. Now, crossed with the interference card indicates multiple failed attempts to break through key resistance. So it very well could be that we're seeing the highs for the year multiple times throughout the year as failed attempts to break through key resistance, and at least one of those failed attempts, the technicals will really lead us to believe that we're going higher, and instead we turn around and reverse. Behavior around the highest high for the year, we have a rally along a diagonal trend line that ends with a fast sudden move higher and then a breakdown through that diagonal trend line with increasing volatility on the way down. Behavior around the lowest low for the year, we have a period of sideways, bumping along resistance sideways, maybe breaking through, bumping along resistance sideways some more. It's an overall pretty bullish card there out of the low. Now, I'm going to get into the week-by-week chart behavior, as well as the timing of the highest highs and the lowest lows, and the local highs and local lows in just a moment. But before we do that, I want to make sure that everybody's aware. The whole purpose of the channel is to transmute some of the competitive energy of the stock market into goodwill. We do that by following the rule of karma for the channel. You go to the resources tab of our website, Tarot for Traders, and 5% of the profits from every profitable trade utilizing this information should be donated forward to one of these charities, or pick a charity of your choosing, as long as you're paying 5% forward, and then 5% should be sent back to the channel through one of these links. If you're international, you can use Wise or you can use YouTube tips, and that leaves you at 90%. Make sure to spend that 90% out of love. As long as you follow those rules, you follow the rule of karma for the channel, the universe considers you an angel investor. It's going to send it back to you tenfold for following through. Blessings to all my angel investors. So let's get back into it. It's important also to understand, guys, each card going left to right across the screen here in these two rows. Each card represents about 2 weeks of time on a calendar, but there will be some readings in which the card's energy does not line up perfectly with 2 weeks of time. And so you have to give the timing of the reading in some cases, not all cases, most cases you won't need to, but in some, you'll need to give the timing plus or minus 2 weeks of wiggle room in some parts, just to make sure that you follow the sequence of events as outlined by the prediction, because that will remain accurate even when we are off by plus or minus 2 weeks. It happens occasionally. With that said, the early part of January, we had a notable decline on a 1-year chart scale. There's a fake out in early January as well, interesting. And then the January low, it forms within a period of erratic behavior back and forth through the same price level, in the midst of which we revisit a opportunity that we recently met in the past. The later part of January is a notable reversal. It looks like it's on the cusp of January, February. There's a notable reversal. And the January high forms from a sideways fluctuating rally that preceded a decline. And I think it probably was a rally going into January. You know what? We can actually take a look and see how we're doing thus far in this reading, because January has come and gone. Sideways fluctuating rally preceding decline in early January, at least the first half, pretty notable decline. And then we get into this erratic behavior back and forth through the same price level. In the midst of that, we see the low here, right? And then we revisit that opportunity, and then we revisit that opportunity here. So that's that pleasure card there. In any case, we see a reversal right here on the cusp of January, February. I would expect either a little bit more decline and then a strong reversal, or we might see a reversal as early as like just this week that's coming up. Either case, the decline in early February offers opportunity to open up a long position before this rally increasing with momentum moving forward into the high. And it's notable to point out that right on the cusp here where the low seems to be between January and February, maybe a little bit more towards February than January, but either way, that low there, it's a prominent low on like a multi-year scale. So that means we're going to see some big moves at some point. And it's also that opportunity right there. We go from the bottom of a range out of a decline to the top of a range as indicated by the strength card, which is a cross-rating congruency. I'll talk about in more detail in the paid version. So that rally takes us to a prominent high or a prominent crest peak on a 1-year chart scale. And it looks like it's probably mid-February when that takes place. The rally also offers a trade opportunity that I'll talk about in more detail in the paid version. There's a pretty significant trade opportunity in February. And we have a prominent trough in the later part of February, a prominent trough on a 1-year chart scale. So there's a decline there in the later part of February and early March. Yeah, there's a decline in like on the cusp of February or early March. We decline through a key support level on a 1-year chart scale and revisit another support level on a 1-year chart scale that was recently an important past opportunity. Usually it's an important price level on like a multi-year scale based on this being a 1-year chart. Behavior around the low for March, we have a crest that we sell off from down to and through support. We do a U-shaped reversal below that support, come back and reuse it as support. Mid-month of March, there's a prominent trough and a big move out of it. The March high forms when we have one of the biggest moves to the upside of the year, taking us into the March high. And it looks like there's a failed attempt to break through key resistance there around the end of March or in April, around the April high or around the cusp of March, April. The later part of March, we have a period of volatility that ends with a fast sudden move higher, and it looks like there's a fast sudden move higher in early April, so they might be kind of combined there. Important trade opportunity at the April high, and it looks like there's a failed attempt to break through resistance there as well. The April low forms after a brief peak that's easily missed, followed by a decline through multiple supports into the low. And then the later part of April, we have a prominent move higher, followed by a full retracement, making kind of like a triangular shape on a chart. There's an important resistance level highlighted in early May. It's an important resistance level in early May, and it looks like we probably decline once we meet that resistance level, which it's resistance in early May, and then the May high, which is mid-month of May, is also a prominent peak on a 1-year chart scale. It forms when we successfully turn that resistance from early May into support, and then we decline pretty notably in bearish price swings and decline into a prominent trough towards the end of the month. Out of the decline, that decline ends with a fast sudden move higher, which is either at the end of May or it's combined into this move in June where we have a prominent move higher on a 1-year chart and a full retracement of that move back down. It also looks like there's a failed attempt to break through resistance there as well, and this is on a 1-year chart scale. We attempt to establish support around the June high. There's a fake out, an intentional fake out shakeout there as well. So that looks like our second fake out shakeout. And a prominent peak towards the end of the month of June or on the cusp of June, July. Big move higher followed by full retracement in the early part of June. Interesting. You know, I saw the merger card here in the end of May for another stock. Interesting. In any case, the prominent move higher, failed attempt to break through key resistance, trade opportunity, and then a full retracement of that move back down. That move down takes us into the lows, I think probably somewhere around the low of June, around mid-June after a failed attempt to break through key resistance, and then a decline through key support. But then we rally out of that into a peak at the end of the month, offering trade opportunity in the midst of that peak. Big move to the downside off of the prominent peak on a 1-year chart scale that forms around the cusp of June, July. Unexpected move higher in early July. An important resistance level on a 1-year chart scale highlighted around the high of July. There's also a notable fake out shakeout on a 1-year chart scale, and a lot of price change to and from that resistance level, allowing for one to trade both directions, which I'll talk about in a lot more detail in the paid version. The behavior off of a prominent trough on a 1-year chart scale for the July low. There's a big move out of that trough, reaching for a distant resistance. The later part of July, we have an overbought crest that we sell off from through multiple supports, and there's a trough right on the cusp of July, August. Guys, if you're interested in helping to support the channel, without our supporters, we would not be able to put out this content. We provide a paid version of this reading and all 1-year readings. It's at the end of the public. If you have the paid version, it comes at the end of the public. And basically what we do is we talk about the timing of the best trades. On a 1-year chart scale, we're talking about the timing of the best trades, like down to a week or 2-week period, but probably a week. And we talk about what type of chart behavior to look for as far as entry and exit into those trades and out of those trades. We talk about any price level information. We're able to extrapolate trades from a multi-year standpoint and any cross-reading congruencies that you're able to see. Also, the comparative performance of soybean versus the S&P 500 for the year of 2024. All that, guys, in the paid version. You don't find that information anywhere else, and definitely not in the same detail or accuracy. We're running roughly a 98% average accuracy. There's 2,000 plus prediction videos with multiple predictions, 2,000 plus videos with multiple predictions in them on our YouTube channel. Free. Check them out if you don't know who we are. We are making history every single day. I don't need to sit here and prove it to you. It's already been proven. You can take the time to go look at the proof, which is undeniable, or you can move on. I really don't care, because either way, this channel will grow, and we will be world famous based on what we're doing here. Appreciation goes out to all of my supporters. Let's get back into it. So a lot of price change around the early part of August. And then probably the same resistance level highlighted in early August early to mid-August that we saw in July. There's a move higher, prominent move higher to reach the August high through key resistance. We stay above it briefly and break back down with a full retracement. There's a prominent peak in the midst of that move on a 1-year chart scale, and then the August low forms after a decline that increases with momentum moving forward into the low. The later part of August, we push the upper end. There's probably the biggest move of the year. We push the upper end of a range higher on a 1-year chart scale, and there's a breakout the early part of September. Doesn't look like it holds. There's a decline off of the September high through multiple support levels. An important price level on a 1-year chart scale around the September low. It looks like it acts as resistance near the low for a little bit, but there's a fake out in the later part of September in the midst of a sideways fluidity, equal amounts of bulls and bears, inflow and outflow. So I think that probably the September low and a prominent low for the year is probably there towards the end of September in the midst of that sideways fluidity, and that would be the fake out, right? We have this breakout into the high in September, but that breakout doesn't hold, so that looks like a fake out to me right there. A sideways rotation along key support on a 1-year chart scale in the early part of October, prominent peak on a 1-year chart scale in early to mid-October, and a significant decline off of the October high, which is also another prominent peak on a 1-year chart scale. The later part of October, we have a decline off of a near overbought crest through multiple support levels. I'm advised to be cautious there, not to be misled and do the wrong thing. And we have a sideways S formation within the channel at the October low, indicating we probably see the October low twice. Early November, we have sideways rotation that ends with a fast sudden move higher, we rally into a key resistance on a 1-year chart scale towards the end of November. It's also an important price level on a multi-year scale, and from that we decline with consecutively lower spikes up on the way down into December. The November low is an important range on at least a 1-year chart scale. I think the November low is probably around the cusp of October, November, in the early part of November, and then that decline with consecutively lower spikes up on the way down takes us into December. The December low forms after a decline through multiple support levels that'll really stand out because it's a cross-reading congruency. There'll be a bit of a rally or failed attempts to break through key resistance on a multi-day scale are highlighted in both early and late December. Late December, there's a resistance highlighted that we failed to break through many times before, and the December high forms when we have the halting of a bullish trend marked by a sharp decline through key support. The sneak preview for 2025, a period of volatility and a sharp drop that'll stand out in that period of volatility. There's a strong likelihood that that's the lowest low for the year, but if it's not, well, there's another location we'll get into. Like if it's not the lowest low, then probably the lowest low here between July and August. My sense is that if it is a lowest low there, it's going to be the same as the low from here, January, February. We have a highest high here in May, probably a higher one here, a higher highest high here in August. It's either the higher high, it might be actually, it's probably the same highest high. And the reason being is because of this interference card, these multiple failed attempts to break through key resistance. And then by the end of the year, it looks like we're probably highlighting it again. Guys, that's the soybean reading for 2024. Thank you so much for watching and supporting the channel. As always, make sure to follow that rule of karma. We are counting on you here to support the channel so we can keep putting out this content and help level the playing field for the little guy, my friends. So keep on supporting. Much appreciation. Blessings goes out to all my angel investors, and I'll see you guys on the next one. Stay tuned if you got the paid version.